silence just shattered. Today, Monday, January 20th, 2026, the global monetary system is responding to an unprecedented geopolitical crisis that has been escalating since early January. President Trump has demanded control of Greenland, imposed 10% tariffs on 8 European nations, and stated that NATO must help the US acquire the island, or the alliance becomes meaningless. To the average viewer, this sounds like political theater. To the silver insider, this is the final domino. Silver hit a record high of $94.54 on January 19th. It's currently trading around $90 per ounce, up over 150% from last year. That is not a market. That is a panic bid into safe haven assets as the NATO alliance faces its greatest existential crisis in 77 years. To the casual observer, this is just another Trump controversy. To those who understand the mechanics of global reserve currency dynamics, this is the sound of the petrodollar system breaking in real time. Since January 6, 2026, the Trump administration has escalated a crisis that threatens to shatter the NATO alliance. Trump has repeatedly demanded U.S. control of Greenland, threatened military action as an option, and on January 18th imposed 10% tariffs on 8 European nations, including Denmark, France, Germany, and the UK, until a deal is reached for the complete purchase of Greenland. Danish Prime Minister Mette Frederiksen has stated clearly that any U.S. attack on Greenland would be the end of NATO. European leaders issued a joint statement saying Greenland belongs to its people and Denmark alone decides its future, but the administration is not backing down. Treasury Secretary Scott Bessent said Europe will understand America's need for control. This is not negotiation. This is ultimatum. Why now? Because this crisis began on January 3rd, when U.S. forces struck Venezuela and ousted Nicolas Maduro, proving Trump's willingness to use military force unilaterally. Because on January 6th, Denmark's PM warned that a U.S. attack on Greenland would end NATO. Because Greenland holds an estimated $1.3 trillion in rare earth deposits and critical minerals essential for green energy, electronics, and military applications. Because China placed export controls on silver in December 2025. Because the Arctic is the new battlefield for resource control between the US, China, and Russia. The administration is not making random demands. They are responding to a resource crisis that threatens American industrial and military supremacy. This is not about Denmark. Denmark is a proxy. The real parties to this negotiation are the European Union, which needs Greenland's resources to maintain industrial independence from China, and China itself, which has spent the last 8 years quietly building economic influence in Nuuk through infrastructure investment and rare earth processing partnerships. Let me translate this into plain English. The United States is stating that if it cannot secure access to strategic Arctic resources through Greenland, it will abandon the collective defense structure that has defined Western geopolitics since 1949. This is not a bluff. This is a direct challenge to the post-World War II international order. This is the same weapon the United States used in 1971 when Nixon closed the gold window. This is the same weapon used in 2022 when Russian dollar reserves were frozen. When the hegemon believes the existing system no longer serves its interests, it does not reform the system. It breaks the system. And when the system breaks, physical assets become the only refuge. The immediate market response has been historic. Silver hit an all-time high of $94.54 on January 19th as Trump announced tariffs on 8 European nations. The metal jumped more than 5% in a single day on safe haven demand. Gold spiked above $4,600 following news that Fed Chair Jerome Powell is under criminal investigation. The dollar index has weakened. But here is what Bloomberg is not showing you. Silver has surged over 150% in the past year. It crossed the psychologically critical $50 level for the first time in history. It's now approaching $100 per ounce. That is the smoking gun. The mainstream financial press is framing this as short-term geopolitical noise. They are telling you to ignore the spike. They are saying volatility will normalize by Wednesday. They want you to believe this is a Trump headline that will be walked back by week's end. What is really happening is this. For the first time since Bretton Woods, a sitting U.S. administration is openly threatening to dismantle NATO unless given control of strategic Arctic resources. Silver is not spiking because of normal market dynamics. It's spiking because the entire post-World War II international order is being weaponized for resource control. When the empire threatens to blow up the Atlantic Alliance, when China controls silver exports, when physical supply is draining from Western vaults to Eastern buyers, the smart money moves to tangible assets. Silver has gone parabolic because institutional investors understand this is not a negotiation. This is the beginning of a new resource-driven world order. Throughout this crisis, physical silver has been draining from COMEX vaults at an alarming rate. Registered silver inventories, the metal actually available for delivery, have collapsed to multi-year lows. Industrial buyers and institutional players are taking delivery of physical metal rather than holding paper contracts. The pattern is unmistakable. When geopolitical stability fractures, paper claims become suspect, and physical delivery becomes everything. Large-scale physical delivery during a geopolitical crisis is not profit-taking. This is institutional-grade preparation for supply disruption. These buyers understand that China placed export controls on silver in December 2025. They know that if NATO fractures, European industrial supply chains face catastrophic disruption. They see a world where rare earth access becomes weaponized and silver, essential for solar panels, electronics, and military applications, becomes unavailable at any price. This means the insiders understand what retail does not yet grasp. If the United States exits NATO, the European Union faces an immediate and catastrophic strategic crisis. They will need to triple defense spending while simultaneously securing independent supply chains for everything from rare earths to energy. That requires currency debasement on a scale that makes 2020 look conservative. And debasement means flight to tangible assets. It proves the big money is front-running the political crisis. It validates the thesis that physical silver is the leverage play on institutional collapse. The United States government is facing a resource access crisis masked as a political negotiation. China controls 85% of rare earth processing. Europe controls Greenland's deposits through Danish sovereignty. The U.S. industrial base cannot function without rare earth access, and it cannot secure that access through market mechanisms because China can always outbid. The Department of Defense has been warning about this vulnerability since 2019. The solution is not diplomatic. It is transactional ultimatum politics. Force Denmark to choose between Greenland sovereignty and NATO security guarantees. Fracture European unity by making the cost of resisting too high. Use the threat of institutional withdrawal to gain resource access without invasion. It is empire logic applied to resource competition. This strategy fails the moment Europe calls the bluff or China offers Denmark an alternative security framework. And regardless of outcome, the very act of making this threat destroys confidence in American institutional reliability. No one forgets the empire that threatened to abandon its allies over a territorial dispute. Trust, once broken, does not regenerate. And when institutional trust collapses, gold and silver become the only trusted stores of value. Throughout 2025 and into 2026, silver has traded at premiums on Asian exchanges compared to Western markets. Chinese industrial buyers have consistently bid above London and New York prices. This premium reflects genuine physical demand from the world's largest manufacturing economy, demand that cannot be satisfied by paper contracts. When silver trades at a premium in Shanghai, arbitrage traders buy Western contracts, take delivery, and ship metal east to capture the spread. This has been happening consistently since China's export controls were announced. Every ounce flowing east reduces Western available supply, and the flow is accelerating as Asian buyers position for a world where Western silver becomes unavailable. The metal is flowing west to east at an accelerating rate. This is not speculation. This is documented vault drain, and it is happening precisely because Asian buyers understand that a NATO collapse accelerates de-dollarization and European industrial decline. They are positioning for a world where Western silver supply becomes unavailable at any price. This creates upward price pressure that cannot be suppressed by paper market manipulation. Chinese industrial buyers need silver for their manufacturing base. They will pay what it takes. That bid cannot be margin called away. It cannot be regulated out of existence. It is physical demand for a finite resource in a world fracturing into competing economic blocks. On January 18th, the European Union held emergency meetings in Brussels to coordinate response to Trump's tariffs. 8 European nations issued a joint statement warning that tariff threats undermine the transatlantic relationship. NATO Secretary General Mark Rutte spoke with Trump about the crisis. European Council President Antonio Costa announced an extraordinary council meeting. Denmark announced plans to increase military presence in the Arctic with support from NATO allies, including Germany and Sweden, sending personnel to Greenland. The official narrative from European leaders is unified condemnation. They state that Greenland belongs to its people, that territorial integrity must be respected, and that NATO allies cannot threaten each other. British PM Keir Starmer told Trump that tariffs on allies pursuing collective security is wrong. French President Macron called the threats unacceptable. Polish PM Donald Tusk said NATO would lose meaning if members attack each other. What it actually means is this is real. You do not hold emergency EU meetings on a Saturday unless the crisis threatens the foundation of the alliance. You do not have 8 major European powers issue joint statements unless institutional survival is at stake. You do not see silver spike to all-time highs above $94 unless smart money believes the existing order is fracturing. The panic is genuine. This is Stage 3 empire behavior. Stage 1 is diplomatic pressure. Stage 2 is economic leverage. Stage 3 is threatening to dismantle the institutions you created when they no longer serve your resource acquisition needs. We are watching resource nationalism override alliance commitments. And when alliances fracture over resource control, precious metals become the only neutral store of value. The buyers taking physical delivery are not retail speculators. These are sophisticated institutional players, industrial manufacturers, and potentially sovereign entities preparing for supply chain fragmentation. They see a world where silver becomes unavailable due to export controls, geopolitical fracturing, and resource nationalism. Every NATO fracture scenario involves disrupted supply chains. China has already placed export controls on silver. Greenland holds critical rare earth minerals. Rare earth processing requires silver. Solar manufacturing requires silver. Advanced military electronics require silver. 5G infrastructure requires silver. These buyers cannot afford to be caught without physical inventory when supply chains splinter along geopolitical fault lines. They are price insensitive because price is irrelevant compared to availability. They are taking physical delivery because paper claims are worthless in a crisis. They are moving metal into secure storage because geopolitical volatility is about to make cross-border shipments unreliable. Physical industrial buyers cannot be margin called. They cannot be shaken out by volatility. They cannot be persuaded to sell. They are accumulating strategic inventory while it's still available. And they are doing it while retail investors are still trying to understand what Greenland has to do with their electronics manufacturing. The verdict is undeniable. The great geopolitical repricing has begun. The era of silver as a financial commodity is over. Silver is now a strategic resource in a world fragmenting into competing economic blocks. If you are holding physical silver, realize that you are not holding a metal. You are holding insurance against the institutional collapse we are watching unfold in real time. If you are considering buying, Understand that the price you pay today will seem irrelevant when European currencies destabilize and rare earth supply chains fracture. If you are skeptical, ask yourself why industrial buyers are taking delivery at these prices if this is just political noise. 1. Lock in your cost basis now if you have been waiting for a pullback. That pullback may never come. 2. Prioritize physical delivery over paper contracts. ETFs and futures can be cash settled. Physical cannot. 3. Prepare for multi-month delivery delays as dealers run low on inventory. 4. Ignore mainstream media dismissals. The smart money is acting, not talking. Do not sell on volatility. Do not chase momentum with leverage. Do not assume this is a short-term trade. This is a structural shift in how strategic resources are valued in a multipolar world. Rule number 1. Do not sell your physical silver. The game has changed. This is no longer about trading ranges. This is about survival of stored value through institutional transition. Rule number 2. If you are buying, buy physical and take delivery. The paper market is a trap for anyone who needs actual metal. Rule number 3. Understand that silver at $90 is not expensive in a world fragmenting into competing resource blocks. Analysts are now predicting $100 silver in 2026, with some projecting $135 to $309 based on supply constraints and geopolitical dynamics. Rule number 4. Prepare for capital controls. If this crisis escalates, cross-border movement of physical assets may become restricted. Own what you can hold. You have held through 2025 when silver surged 150% and skeptics said it was a bubble. You held when it broke $50 for the first time in history. You held while mainstream analysts said precious metals were relics of a bygone era. You were right. They were wrong. The system is fracturing exactly as you understood it would. Trump threatening to dismantle NATO over Arctic resources is not political theater. China implementing silver export controls is not random policy. Silver hitting record highs above $94 is not market noise. This is confirmation that resource competition has entered its terminal phase, and tangible assets are repricing accordingly. This is the year the paradigm breaks. This is not the beginning of a bull market. This is the beginning of a global repricing of tangible assets versus institutional claims. You are positioned correctly. Do not let volatility shake you. The volatility is the proof that you are right. Keep holding. Keep watching. The smart money is taking delivery. You should be too.